In the late 1400s, a bold Italian explorer named Christopher Columbus embarked on a daring journey. Convinced that he could reach the riches of Asia by sailing west, Columbus sought the support of Spain's monarchy for his ambitious expedition. On August 3, 1492, he set sail with 3 ships, despite facing skepticism from many. As weeks turned into months, the vast expanse of the sea stretched endlessly before them, instilling fear in the hearts of the crew. Yet Columbus remained resolute, driven by the belief that he would discover the coveted eastern shores of Asia. However, fate had other plans. Instead of finding a direct route to Asia, Columbus stumbled upon a new monumentous chapter in history, the encounter between the old and new worlds. Before we explore further, let me introduce myself and this podcast. Hey there, I'm Varun Duggirala and welcome to Finance Flashback, brought to you by ICICI Prudential Mutual Fund. In this podcast, we dive deep into the world of finance, simplifying complex concepts to empower you on your investment journey. Drawing insights from history, we uncover valuable lessons that can enhance your present investment strategy. So let's embark on this enlightening journey together. Just like Christopher Columbus, you might find it hard to navigate your way around the world of equity mutual funds. It can be harder still to figure out the best mix of stocks, smart fund managers, and great performance. A lot of what goes into choosing an equity portfolio is the market capitalization or size of the companies that are in it. This is an important factor that affects its potential, and today let me tell you how to utilize potential to its best advantage. Just like Christopher Columbus navigated the uncharted seas, navigating the world of investments can be quite daunting at times. Understanding the best mix of stocks for your portfolio, how to manage your investments, or time the market can seem like a challenging voyage, especially with the busyness of life. But fear not, as in this podcast, we'll be your guiding compass, helping you navigate through the complexities of finance and making informed decisions along the way. And speaking of navigating through investment waters, one category of funds that may attract your attention is large cap mutual funds. These are a category of mutual funds that primarily invest in companies with large market capitalizations, meaning they fall in 1 to 100th bracket in terms of capitalization. These companies are often well established, financially stable, and have a proven track record of success. By understanding the dynamics of large cap mutual funds, investors can gain insights into how to build a resilient and diversified investment portfolio. If you're intrigued by the idea of rooting for the underdog or understanding why winners often take it all, then stick around as we dive deep into the fascinating world of equity investing by taking some examples from history. The British Empire's colonization of India was a multifaceted process, driven by economic, political, and military motives. These factors were crucial because they underscored the empire's desire to exploit India's wealth and resources for its own gain. The story begins with the lucrative spice trade, particularly the demand for ginger and pepper, which prompted British traders from the East India Company to establish trading posts in India during the 1600s. Over time, their influence expanded as they engaged in trade across the country, dealing in various commodities like opium and textiles. As the Industrial Revolution took hold in Britain, the empire's need for raw materials escalated, making India an invaluable source of cotton, jute, and indigo. By capitalizing on India's abundant resources, Britain bolstered its economic prosperity and dominance on the global stage. Large cap mutual funds can be likened to the British Empire's focus on India's abundant resources during colonization. Just as the British Empire recognized India's vast reservoir of raw materials as a valuable asset for economic growth, investors in large cap mutual funds target companies with substantial market capitalization, viewing them as stable and less volatile sources of returns compared to other market caps. In both cases, the strategy revolves around harnessing the potential of established entities. Whether it's leveraging India's resources or investing in well-established companies, achieving potential long-term growth and success is the focus. The acquisition of YouTube by Google in 2006 stands as another remarkable testament to the transformative power of strategic foresight and collaboration. In just the first year, YouTube emerged as a game-changing platform, capturing global attention with its innovative approach to online video sharing. Recognizing its potential, Google made a bold move to acquire YouTube for $1.65 billion, integrating its offerings into its digital ecosystem. This strategic partnership not only expanded Google's digital footprint, but also enriched user experiences by seamlessly integrating video content into its search engine. As YouTube continued to evolve under Google's ownership, it became synonymous with user-generated content, and became a cultural phenomena. The success of this acquisition underscores the importance of recognizing and investing in disruptive technologies and visionary partnerships. Just as Google leveraged YouTube's potential to enhance its digital offerings, investors in growth-oriented mutual funds seek out companies poised for transformative growth, driving long-term value and success. By including large-cap companies in their portfolios, investors can align themselves with industry leaders, capable of capitalizing on emerging trends and shaping the future of technology and digital innovation. This strategic investment approach mirrors Google's acquisition strategy, demonstrating the value of identifying and investing in companies with the potential to drive significant growth and shareholder value. Kicking things up a notch were two brilliant minds, already well established in their fields. The story unfolds in the hallowed halls of Cavendish Laboratory in Cambridge in the 1950s. Led by biologist James Watson and physicist Francis Crick. Their goal? To unravel the structure of DNA, the key to life itself. James, with a background in biology, and Francis possessing the analytical skills of a physicist, seemed an unlikely pair. Yet, their shared goal drove them to collaborate on deciphering the complicated language of genetics. As they dove deep into the problem, they encountered Rosalind Franklin's mysterious X-ray diffraction images of DNA. Finally, in 1953, their hard work paid off, with a groundbreaking paper published in the prestigious journal Nature. The world learned about DNA's double helix structure, resembling a beautiful spiral staircase and holding the key to life's code. The Watson-Crick story isn't just a scientific discovery. It's a testament to how experts from different fields can unite to solve monumental challenges. Just as Watson and Crick are legends of the scientific world, large-cap mutual funds focus on investing in well-established companies that are legends in the investment world. These companies have a big reputation and a track record of making money for investors over the long term. By targeting the top 100 companies based on market capitalization, these funds offer relatively steady investments, banking on the stability and success of these market giants in the long term compared to, let's say, mid or small scale companies. As we conclude our journey through these historic examples, one thing becomes abundantly clear. Success often stems from strategic vision, collaboration, and a willingness to embrace change. Whether it's Christopher Columbus charting new territories, Google acquiring YouTube to redefine digital content, or Watson and Crick unraveling the mysteries of DNA, each story teaches us invaluable lessons about the power of foresight and innovation. In the world of investments, large-cap mutual funds embody these principles by focusing on established companies with proven track records. By aligning our investment strategies with industry leaders and embracing the potential for long-term growth, we can navigate the complexities of the financial landscape with confidence. So as we embark on our own investment journey together, let's remember the lessons of history and the wisdom they offer. By harnessing the spirit of exploration, collaboration, and innovation, we can navigate the seas of uncertainty and chart a course towards potential financial prosperity. Now it's time for me to sign off. This has been Finance Flashback, brought to you by ICICI Prudential Mutual Fund. We hope this episode helped you understand large-cap mutual funds a bit better. I'm Varun Duggirala, and don't forget to join me on the next episode.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.